Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your agriculture update for this Wednesday, and we're now at the 29th of August, 2018, about 3:40 p.m. Central Daylight Time. As you can see right through here what's going on, we had an up day in the grain markets, but the powerhouse was the wheat market. And the reason for that is that Russia has contacted its exporters, and I believe it's right next week. They're calling for a meeting. They want to know what's going on with the export business. And the real part of this is how much are the exports going, and is Russia going to put duties on their exports, because throughout Europe, wheat has been a real problem. My own guess, that's going to be the number one thing that everybody looks at, and it wasn't lost on the market today as it got a good bounce. The dollar's still lower, and we're still seeing rallies in a number of foreign currencies against it. So as we come in here to the weekly area chart of closes, the market is still under the 18-week moving average of closes. We still have a movement to the downside, if you will, what I'll call that down thrust. And with today's close, we're down for the week 18 3/4 cents. When you look at the chart here, you can see it's now a very small break into these prior lows at the 825 area. One of the things that we're all looking for is what is the farmer going to do now that he knows the size of his aid package? And the question is, does he refrain from selling at this point because he thinks prices are too low? As for the crop size, it's big. Yields are what it's all about, not so much acreage in my opinion. When we look at the swing line, we still have the pattern of a higher high and a lower low. And you do realize that every day since back here, so it's this day, 1, 2, 3, 4, 5, 6, 7, and I think today was as well one of those days. Yeah, it was. 8 days in a row, we have had lower lows without the market reversing course on it and taking out a prior day's high. That's a pretty big break. It's called a vertical price break. The market is under the 18-day average of closes, and when it is, I say the market has downside bias. If the market rallies, I'd look for resistance at the 18-day average. That's often what happens when you're above the market the same. Here it didn't happen, but I'll go back to areas where it did, and you can get that more times than not. In charting, nothing works every single time, but you play the odds, you play the percentages, and I'd still look for the resistance at that number. This is called running the lower Bollinger Band. The black lines are the Bollinger Bands. Bollinger Bands are an algorithm designed to keep the market trading within them 95% of the time. It's exactly what seems to be going on here. The market is riding that band lower, and it is oversold. Now, oversold conditions do one of two things. They either correct, and with that correction, often you get a bounce in the market, or they convert. And when they convert, you'll get a situation where the red and blue numbers both go sideways under 20 for several days or more to lock it in. Today is day one. Yesterday, both numbers were not under 20. So we're just in an oversold market. You need at least 3 days. In the meal market, this is a bit different. You've got a pattern of lower highs, lower lows. You've got the same amount of down, lower lows. But here, if we take a look, we look at today's action, both numbers under 20. Yesterday, both numbers under 20, and the day before. Unlike the bean market, if I go one more day, you can see it wasn't. Unlike the bean market, this has converted from being an oversold market to locking in the bearishness, which means on rallies, I'd expect fairly aggressive selling. In the soybean oil market, this market is caught at the 18-day average of closes. You had just a day or so where it didn't hit it, but it's just going sideways within there. It is a trendless market. In the corn market, similar to the market in soybeans, you are riding the lower Bollinger Band. You can see you've got both numbers under 20 today. They were both under 20 yesterday, not the day before. Tomorrow will be an important day in corn. I would assume the market will try to rally to not embed That's often the case. Not always, often. That doesn't mean it won't embed. We have to watch that. In the wheat, the rally off of the word as to what went on in Russia, back up to the 100-day average. But keep your eye right here. Notice how this market closed 1751, but when you close at the high of a move higher and the market starts knocking on the door of the 20 reading, often when you reopen, you get through that. So I'm going to want to see what that does tonight. If it loses the embedded reading, then odds favor the price and the 18-day average to make a run. If it doesn't lose the embedded reading, this should be the resistance area. In the sugar market, here is a market that can go one of two ways tomorrow. First, if the market takes out 1056, it would be over the 18-day average of closes. You'd have a pattern of higher lows and then higher highs, which would be bullish in the market. If the market takes out 1022, the market would have lower highs, lower lows, and you put into play 986. Tomorrow's an important day. In the coffee market, the trend remains bearish. The market is still in an oversold condition. I consider oversold when either of the numbers that make up the slow stochastic are under 30. As you can see, the D line, which is the blue, is 2851. That is under it. In the cocoa market, in Cameroon, if you watch what the news is talking about, there's more insurgent fighting. People are leaving in droves. They're abandoning cocoa farms. You have to keep your eye on that because it does present this area one of the big cocoa areas. You've got a market that's in an uptrend. It is overbought, not yet embedded. Both numbers today over 80 the day before. I'm wrong, and the day before. So we have Monday, Tuesday, Wednesday. You now have an embedded reading. I would look to see if the market drops from here. Do you keep it? Very important. But the market is certainly throwing more bullishness than bearishness out. And cotton fought the battle that we've talked about. If you go back to what we've been saying in our videos, I thought the resistance might show up at the 100-day average and the 18. They were so close together, and it did. The market got today to 84 1/4. Took out yesterday's high and did a reversal in the market. It is still an oversold market as the number reading on the D line is still 26, so not that I see there. In the cattle market, trade battle between the 18-day average and the 100. Just back and forth action as the market's setting itself up, looking for the next direction it's going to take. The same in the feeder cattle. I'll call these trendless markets. Hogs are back into a downtrend. Resistance 52.72, let's call it, the 18-day average. The risk factor is rather high because if one were going short, you don't break this pattern unless you get over 55.65, but that's almost $1,200 away. So interesting time, but I don't know that the market's going to want to do much with it. One of the things that we do is we write on all these agriculture markets, but we write for the options trader, the futures trader, the hedger, the commercial user. And you'll see our newsletters talk about this. So you get to sign up for what you want to see in our research. We'll send it to you. Our customers get this all the time. You're entitled to get a free trial if you haven't seen it yet. And yes, you can pick the areas you want. In order to do so, either call my staff at 866-973-2077. You can always go to our website, sign up for it there, or you can click up here if you're watching me on YouTube, and that should take you right to the page to sign up for. I'm Ira Epstein. You have a good day, and I'll see you tomorrow.